Well, I think you've got to start with the context of the global markets prior to the Israeli bombing of Iran. The markets were very well supplied. In fact, there was plenty of spare capacity, and OPEC was bringing additional barrels onto the marketplace. And so prices were generally trending down with that additional supply coming into the marketplace. What we saw right after the initial bombings is the markets reacting to the potential implication of impacting the production and the supply coming from that region, not necessarily what was coming out of Iran. In fact, there was plenty of supply available to offset any barrels that were disrupted and kept out of the market coming from Iran. It was more of a concern around the transportation corridors, the Straits of Hormuz, or other production in the region. As the bombing and the conflict progressed, what became very clear was a concerted effort not to disrupt that global flow of oil and natural gas. And so as a result, the markets have stabilized and prices have come back down, reflecting what I think is a very healthy supply of both gas, natural gas, and oil.
In other words, you think these prices probably stick around these levels for a while?
Yeah, I think, the concern was a broader disruption in the region. Today, I think it looks much less likely that will happen. And so I think stability there, if something was to change, you'd see that impact, just reflecting the critical source of supply coming out of that region of the world.